Welcome back to the Dividend Diplomats YouTube channel. Lanny, Bert, you know us by now. We are going to do today a dividend stock showdown. That's right. We are putting the two home improvement giants head to head once again on our YouTube channel. Home Depot, Lowe's. Get after it. Let's see which one is the better stock to buy today.
Guys, smash that subscribe button. Give us a nice thumbs up because finally Lowe's and Home Depot are back in the dividend stock showdown ring. Two colossal giants here in the home improvement space. Guys, inflation is real. The recession is real. Interest rates are real. Supply chain is real. So how do these two dividend massive growth stocks look? And is one of them the better stock to buy? Bert, nice picks. I know you reached out to the Twitter community, the Twitterverse, to see which stocks to put head to head here on this one.
That's right. And honestly, people, we read all the comments on Twitter. We read them here on the YouTube channel. We take it to heart when you say you want us to look at stocks, you want us to run through analyses. We try to add them to the list and keep them going. And this seemed to be the top contender from the tweet that we threw out the other day. So you know what? Screw it. There were some other great ones on that list too. We have plenty of stock analyses we can continue doing here or writing about on our blog, which a link to our blog is down below.
You know what's pretty interesting, Bert, is that, we've been dividend investing, I know myself over 10 years, yourself 10 years pretty much.
Ish.
And you don't own Home Depot or Lowe's, right?
No, I own neither. What about you?
So yeah, neither do I. So it's pretty interesting. Such a big space. And yet you nor I have ever owned these stocks. And, I'm wondering if it's the dividend yield, is it the debt? We'll have to find out when we look through the metrics. And for those that do own one of these stocks, let us know in the comments, which one do you own? We're very curious. And how long have you owned those stock positions?
Yeah, so here's what we're going to do for the layout of this video. We're going to first run them through the Dividend Diplomats dividend stock screener. Head to head, each metric. We're going to talk through each one of them. The three metrics of our screener: PE ratio less than the S&P 500. And of course, they're going to be head to head for all of these. Payout ratio less than 60%, although the perfect payout ratio is 40 to 60%. 5-year dividend growth rate on average, how many years they've increased that dividend. And then the bonus metric, that dividend yield. But we're not just going to stop at the screener for these. We're going to take a look at their latest 10Q and earnings release, which were as of the last quarter. So we're still a few months behind, but the earnings release are going to be coming out here in the next few weeks or so. And then we're going to look at some of the balance sheet metrics and then some of the income statement metrics after we run them through our screener.
Let's do it, guys. It's time to run them through the Dividend Diplomat stock screener. We will take a quick look at the price to earnings ratio. We'll look at the dividend payout ratio as well as the history of growing dividends from these two colossal giants here. We're going to kick things off Home Depot style. Ticker symbol is HD for high definition. No kidding, for home debit. Home Depot, guys, trading at $315.91. A little pricey for my wallet there, Bert.
It is. I always love when companies have those really high share prices. What's their EPS, Lanny?
Honestly, they're projected, a bunch of sixes. They're projected to do $16.66 in forward earnings right now. I know, Bert, you love that.
I do. The Iron Maiden fans out there, get the number of the beast going with a 1 in front of it.
Get out of here.
I know that's not in your wheelhouse, Lanny. So Iron Maiden is not in yours.
That is all you.
I pop it on every once in a while when I'm in one of those moods and just go to town, jamming out to Iron Maiden. It works.
When Bert's cracking his natty daddy, he does.
Yeah, no, tonight's a Bud Light. So, all right. So with a earnings per share of 16.66, that gives Home Depot the PE ratio of 18.96. So just a smidge below the S&P 500. Let's see how Lowe's compares. Lowe's 199.04. EPS is 13.75. PE ratio is 14.48. So, it's pretty obvious. Lowe's is cheaper valuation right now based on the PE ratio.
Lowe's is cheaper. Now, which dividend is safer? So if you look at Home
Hmm.
Depot right now, spread over 4 quarters, but on an annual basis, it's $7.60. So their payout ratio is 45.62%, and Lowe's is 30.55%. And they pay a $4.20 or $1.05 per share per quarter. So Home Depot's payout ratio again, 45%, and Lowe's just over 30. Lowe's dividend payout ratio is lower and possibly safer.
I think they're both safe, but in this case, I don't know if lower is always better because Home Depot falls in that perfect payout ratio range of the 40 to 60. And we always think that's the perfect payout ratio range because that's the balance of reinvesting in the company and paying out to shareholders. So Lowe's being below that range indicates that maybe they have room to pay out a larger dividend to shareholders than they're currently doing, which is
Right.
why I honestly think Home Depot may actually have the advantage here, even though their payout ratio is slightly higher.
Well, let's see who grows their dividend stronger, better, faster. Is it Home Depot or is it Lowe's? Well, over the last 5 years on average, Home Depot's 5-year dividend growth rate, guys, is 16.64% for Home Depot. Real solid double digit banger there. Well above the rate of inflation, more than 2 times the rate of inflation currently, obviously well above the historical rate. Lowe's not too shabby though themselves at 19.73% on their
Mhm.
5-year dividend growth rate on average. Massive. Obviously, they had the housing boom and DIY during the pandemic to help pad that as well.
Yeah. And how long have they been increasing their dividend? Home Depot, 13 plus years. They're halfway to becoming a dividend aristocrat. Lowe's, dividend king. Get the crown. Throw that bleep on top of your head there. Lowe's has increased that dividend for 61 years. So, I mean, obviously, from a history standpoint, you can't really beat what Lowe's has put down being a dividend king.
But guys, what about that dividend yield? What
Mhm.
about how much these stocks owning them pays you each year? Is it above your high yield savings account rate, whether it's at Ally, SoFi, Marcus, Capital One, you name it? Let's see here. Home Depot's dividend yield right now at the time of this video, which is January 3rd, 2.41% for Home Depot. Now, for Lowe's stock shareholders, you're getting paid 2.11%. Both above 2. Home Depot has the edge by 30 basis points or zero point 0.3. Both are well above the S&P 500 as well.
All right, so let's summarize the stock screener here. PE ratio, Home Depot 18.96, Lowe's 14.4. Payout ratio, Home Depot 45%, Lowe's 31%. 5-year dividend growth rate, Home Depot 16.64%, Lowe's 19.73%. Lowe's increased that dividend. Home Depot's increased that dividend for 13 years, Lowe's 61 years. Yield, Home Depot 2.41%, Lowe's 2.11%.
There it is, guys. Those are the metrics. Now to look at what their balance sheet looked like at their last earnings slash press release. Check the SEC filings, guys. We like to look at from the balance sheet perspective to see if they're liquid, to see if they can get through some bad storms as we're currently in. We like to look at the current ratio, the quick ratio. We'll throw in the debt to equity as well as how much in long-term debt they have. Bert, what does this current ratio look like for both of these DIYers?
All right, for Home Depot, it's 1.4x, and Lowe's, it's 1.2x. Both clear that 1x hurdle, meaning short-term assets can cover their short-term liabilities that are 12 months or less. That's exactly what we want to see for the companies.
But I know a lot of retail has been having inventory problems. So if you back out inventory from their current assets to get to the quick ratio, which again is current assets minus inventory over your current liabilities. Are we near one on here?
No way. Not even close. Home Depot's is 0.3x. Lowe's is 0.2x, which you said it. There's nothing more to really say. A lot of their cash and short-term assets are locked up in inventory. That's what this is telling us. So let's look at the debt. Let's look at their debt to equity ratio. This one I thought was hilarious. Home Depot's debt to equity, 33x. Lowe's Couldn't even figure it out. Their balance sheet had negative equity. So there was an NA or whatever is it. What's the symbol, Annie? When is it NA on a financial statement when it's like not irrelevant? Or no, it's NR. That's what it is. It's not relevant because it's negative. So let's look at the debt. Let's talk about debt because clearly both these companies have a lot of debt. Home Depot, 41.7 billion long-term debt. Lowe's 32.9 billion. And I think what's potentially something to even note is, Lanny, what was the trend in their debt that was observed?
It's not going down, guys. It's actually going up. Home Depot went up about 5 billion in long-term debt from the last quarter to this quarter. And then Lowe's debt actually went up about 33%, almost added another 10 billion in debt on top of their 23 plus billion they already had.
So it's an interesting trend and one to continue keeping an eye on in this sector. Let's look at the income statement now. We can just kind of rip through some of these quickly. The last one was Q3, so they had Q3 sales reported and 9-month year-to-date sales. So Home Depot Q3 sales 38.8 billion. It was an increase of 5.6% compared to the last year. Year-to-date, the 9 months 121.6 billion, an increase of 5.3%. Lanny, what was Lowe's looking at?
Lowe's sales growth is not as strong as Home Depot. They made it to 23.5 billion for Q3, up 2.45%. But year to date, 75 billion, and they're actually flat or slightly down by 0.4% right now on the sales front.
So Home Depot showing more growth, although Lowe's did say that they're going to raise their expectations. They raised their guidance after the last earnings release. So that's a positive sign to see some growth coming back, but still they're clearly lagging Home Depot on the sales growth front. Lastly, let's look at net income here. Home Depot's Q3 net income, 4.3 billion, was a 5% increase year to date for 9 months. 13.7 billion, another 5%. So pretty consistent here from the Home Depot front. And what was Lowe's looking like, Lanny?
That is very consistent. Lowe's did not knock this one out of the park. Again, they took a 2.1 billion impairment charge when they sold its Canadian business for cash. Cash for clunkers right now is what Lowe's is doing.
Cash for Canadians.
So their net income is only 0.2 billion now. So that growth is pretty much all gone. There's nothing. Net income year to date is actually only down 24% despite selling that much and taking an impairment charge.
So again, you're seeing a little bit rocky, a lot of noise going on with Lowe's right now, where Home Depot's a much steadier stream. That's what I'm seeing from the income statement and even the balance sheet perspective. So
Bert, this is the showdown here. Which one is much better right now? Which one's performing better? Which one's a great dividend stock right now?
I mean, I would say performing better, Home Depot. That's just what the numbers are showing. From a valuation standpoint, Lowe's is cheaper, but again, it's cheaper because it's not performing as well right now in the sector. I think the question you have to ask yourself about Lowe's when you're going through this is this a short-term blip? What are the long-term impact of what's going on with the sale of the Canadian with some of the slumping growth? But the other thing to remember too is they are dividend king. They have been through cycles before and still managed to increase their dividend. So Lowe's is actually looking interesting to me. And as I keep going through this now, so I keep going back and forth. I think Lowe's earns a spot on my watch list. I'm not running to buy yet, but it's definitely one to keep an eye on, especially if the yield keeps continuing to increase. What are you thinking here, Lanny?
Keep them on the watch list. Keep both on the watch list, actually. I think you and I were talking before recording this video. We both think there should be or could be some room for this to go down a little bit further from these prices. Obviously, we're not predicting or timing the market, but based on metrics, we're not running to buy these stocks.
Mm-hmm.
Both great dividend stocks, so congrats to all the shareholders. But for an entry point, for a new position, I'm watching, but waiting.
Yep, I think that's fair. Everybody, let us know what you think of this analysis. Which one comes out on top? What are you doing with Home Depot, Lowe's? Are you avoiding the sector altogether? If you haven't already subscribed to the channel, give us a thumbs up. Got to make one note to one of our commenters. Billy, I hope you can forgive me for investing in the Fundrise Innovation Fund. I keep seeing your comments about seem like you're disappointed in me that I'm not investing that $1,500 in dividend stocks. So Hope you can forgive me. We're getting back on track here.
Guys, in the words of the diplomats, you're either with us or you're against us. That was Bertha, Hurt, and Lanny from the DD. Over and out.